What is up, everybody? Happy Friday. Welcome back to another episode of Benzinga Live. Yesterday, I thought it was Friday. Today, it's actually Friday. Market moving higher ahead of the long weekend. Everyone anticipating this week, lower volume toward the end of the week. Doesn't mean, necessarily lower volume, that the market's going to go lower, just that there's going to be lower total shares traded. So there might still be more buyers than sellers out there today. We'll be looking at what's going on in the markets, playing some games. We are doing a little bit of a different show format today, some more segments. So shout out to our producers behind the scenes, Rohan and Malia, for helping get those set up. So we should have a little bit more structure today, kind of going to play around with that. So as always, if you guys have any feedback, any suggestions, drop them in the chat, because we always like to incorporate that feedback into our shows, try to deliver the best content possible. But yeah, like the title says, right now we are still moving higher. Q's up 1.15%. The S&P 500 up about the same, about 1.2%. So good to see that. We'll talk about why the market's moving higher. Of course, big jobs data coming this morning. Probably the biggest and only real headline we're going to get today, considering it is Friday, heading into Labor Day long weekend. Usually just kind of slower on the news front, but like I said, we'll have some fun, different interactive segments today. I will be joined at 12:45 p.m. Eastern toward the end of the show by Patrick Dahan. He is, you might know him on Twitter, the Gas Buddy guy. At Gas Buddy guy, he's got about 55,000 followers. He's, actively doing the, tracking gas prices, seeing what's going on in the gas market. So I want to talk to him because we've basically seen gas prices fall for 75 days straight now. I want to see how long can we, continue that going, seeing what's driving that, seeing what to expect next in gas prices, because that has been a big driver of inflation. Yes, Jonathan, I did. Appreciate it, my man. All right, guys, let's go ahead. Get to the intro.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How are we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a breaking news.
All right, y'all, we are going to hop straight into the top headlines of the day. Well, the top headlines that I picked out, again, kind of a slower news day, of course, on a Friday going into a holiday weekend. But let's start. Title of the show, Market Moving Higher Ahead of the Long Weekend. Why the market is moving higher. So we got jobs data coming out this morning. So we added 315,000 jobs in the month of August. Pretty strong there. And you might be thinking that's why the market's moving higher. Not exactly. If you recall, a couple weeks ago, we got the non-farm payroll higher than expected. The market moved lower because, the anticipation there is from investors, okay, that means that the Fed can continue hiking. The labor market is strong. Well, we actually saw in August, while we did add a lot of jobs, the unemployment ticked up. So the expectation was for unemployment to be at 3.5%. The real number was 3.7%, so 0.2 higher than the estimated on unemployment. That's showing signs that, hey, maybe the Fed's efforts in cooling down the labor markets, the Fed's efforts in bringing pain to the labor markets, like Jerome Powell said they were going to do at the Jackson Hole Economic Symposium, seems to be working, at least a little bit, if unemployment is ticking higher. So that explains why the market is moving higher. Unemployment ticking higher, meaning, okay, maybe the Fed, instead of raising rates higher, will say, okay, we see unemployment rate rising. Maybe we don't need to raise rates that quickly or that hard. So again, I'm not expecting any sort of pivot or any sort of, dovishness from the Fed, but that is how that's going to be interpreted, that eventually these numbers, unemployment rising, will allow the Fed to get there, hopefully sooner than expected, at least. Well, maybe not hopefully, because that might mean that, we'd have to see some bad things before then, but everyone just watching what the Fed's doing right now. Still, we're still about 3 weeks away from the next FOMC meeting. Up until that time, just making sure we're watching all the economic calendar things. We will get CPI data next Wednesday, so that will be not next Wednesday. I think the following Wednesday, September 13th. Juice Parker saying, I have no clue, just trying to spin stuff. I mean, if you think the market's up for a different reason today, please enlighten me. Because that seems to be the consensus across the board, as well as how I interpreted it. Because I was expecting, okay, hot jobs data, market lower again, just as we did a couple weeks ago. And again, so that unemployment ticking higher is assumed to give investors something. We can see that right here. Here, let me share my screen real quick. I know this isn't part of the game plan for today, but we can see it in numbers, right? It's not just me subjectively saying this, right? This is objective right here. The CME watch tool using futures markets. You can go through their whole methodology right here. I'll drop this link in the chat. So we can see right here. 1 day ago, they were given a 25%, so a 1 in 4 chance that we would get a 50 basis point hike. Today, that jumped up to 42%. So the odds drastically increased today after that economic data that we are going to get a lower Fed rate hike at the next meeting than what was expected yesterday. So again, that is, how I interpret this. Lower rate hikes, the Fed potentially getting dovish because unemployment is ticking higher. The market is trading higher. Again, Deuce, this is community. This is a wide open chat. You've got other ideas. You've got other theories. Go ahead and drop them in the chat. All right, second top headline of the day. LuluLemon. Lulu reported earnings yesterday after the close. And what a lot of people anticipated to be a kind of weak report. We have this whole weak macro situation, people talking about a recession, people talking about inflation and the consumer not spending money. Well, Lulu said not so fast. Shares are trading higher after the company reported better than expected Q2 EPS and sales results. Let's go through those numbers real quick. So the company reported again yesterday after hours. EPS came in at the non-GAAP EPS of $2.20, beats by 34 cents. Revenue beats by 100 million. Guidance above consensus. So they basically said, "Hey, we're doing fine. We're using our air traffic." LuluLemon, they explained in the call, they have a way to use air freight, I guess, to bypass some other supply chain woes. So LuluLemon doing completely fine. I think that's giving a lot of investors and different people on the market today confidence that, hey, at least, especially in the kind of more luxury, higher end stuff, people are still spending money. And, I don't know, for people out there, a lot of people that I talk to, Jay Rice, I like Muhammad a lot. I got a book from him right behind me, actually, somewhere. Maybe someone took it. But I don't know what that means. The report was Goldilocks, like in a good way. But anyway, back to LuluLemon. So the numbers were all good, but maybe more importantly, the company gave strong guidance, saying, "Hey, we're not expecting any big downturn in consumer demand or sales or anything like that. Basically, we think we're going to be fine going forward." Looking at the chart right here, and I can get that pulled up. We are, still well off our highs. So despite another strong report from Lulu, a company that still looks to be growing, a company that has pretty strong financials. It is expensive because it is a growth stock and is still expected to grow. But looking at this, I mean, we got to highs of nearly $500, and we're only at 320 right now, and that's while we're still up 8.7% today. Oh, we don't allow links in the chat. I'll check his Twitter feed real quick. I'll do that after we get to our next top story of the day. This one not as much market related, but something that a lot of people have been talking about on Twitter and throughout. Serena Williams been dominating the U.S. Open. Well, at least winning in the singles matches. She upset the number 2 tennis player, female tennis player in the world. She's incredible. I mean, she's doing this at 40 years old after having a kid. A lot of people are watching this hoping she can still win. Her next match is tonight, 7 p.m. against Australian Ajla Tomljanovic. I don't know how to say that. But I'm going to be watching that tonight. We do have to say Serena Williams and Venus did lose in the doubles match. So that's kind of sad there. They're probably last time ever playing together as sisters in doubles. They lost in the first round. But, we're going to keep watching this. Serena Williams, you know, as many people out there, some people love her, some people hate her. You got to respect, hey, at 40 years old, she's out there beating, you know, 23, 24, 25-year-old players that are at the top of their game. So, you know, a lot of Americans, a lot of people around the world are cheering Serena on here, rooting for her to win. So, again, as we are heading into the long weekend, maybe some slower headlines on the market, on Wall Street. Wanted to bring some focus into this, into some other lighter headlines. If anyone else, you know, has any thoughts about Serena or someone else they'd like to see win. On the men's side of the bracket, things interesting. You really have, as far as huge names, you really just have Nadal and you have Nadal. Well, here, let's go to the U.S. men's Open bracket. Kyrgios, like, you don't have a lot of the big names. You don't have, of course, your Federer, your Djokovic. Oh, Buglog. Glad to hear it. Glad to hear it. Yeah, so here on the men's side, oh yeah, Medvedev. So I'm rooting for Nadal, obviously. I'd like to see Nadal come here. He's playing Gasquet tomorrow. We'll see. I don't know. Excited. I don't know if we've got any tennis fans in here. Most people are just watching for Serena at this point, but yeah, should be exciting there. All right. Next segment is guess the top and worst stock of the day so far. So in the future, we're gonna have some other people from Benzinga doing this with me up here. You know, maybe some more interactive games with different Benzinga personalities. But for today, we're just gonna put this out there to the chat. So I'm looking at the movers tool on my Benzinga Pro. Obviously, I'm not gonna share my screen. And I have, you know, we're gonna do it by sector. So today we're going to pick energy. And so here's going to be the criteria. I'm going to filter out tiny companies. We're going to go up to $2 billion. And you are going to try and guess the top performing energy stock today. Got to be at least $2 billion. I'm looking at the company right now. Honestly, I don't even know if I've ever heard of this company. So this might be a hard one. And there will be... See, I don't know if anyone's going to be able to get this without cheating. We'll take tickers. We'll take names of the company in the chat, however you want to guess it. And then we'll do a few more, because I think there are some interesting ones. We can do biggest losers in a different sector. So again, the objective here, I'll put it up on the screen in writing for anyone who's a more visual learner. Guess the top performing energy stock today, bigger than 2 billion market cap. All right, Shelly's disqualified for cheating using her screener. You know, Shelly, there's always going to be different, you know, it's like when we do trivia. Like, we all have Google too, but we're using honor system here. Got to use the honor system. All right, how about we do this? We'll do biggest loser. So instead of energy, we'll switch over to consumer staples. Oh, this is a good one. No, you use Google, I see you. Is this a contest? Who has a screener? Yeah, you have to buy pro.benzinga.com to participate. Just kidding. You don't even have to buy Benzinga Pro at all. You can use a 2-week free trial, no credit card needed. Try it out for 2 weeks. If it helps your trading, great. If not, hey, it's not for you. You tried something for 2 weeks. No harm, no foul. Appreciate it, Alkesh. Actually, funny story about All right, let's see if we've got any other guesses. So the worst performing stock in consumer staples I'm seeing is RLX. RLX. I thought that was Rolex, but it's not. That's why I said this is a good one. RLX Technology down only 2.5%. So consumer staples having a really good day. I'll tell you your best performing consumer staples of the day is Cal-Maine Foods. Also really haven't heard of that one. I was going to say a funny story about my haircut yesterday while we're waiting for some more guesses to fly in the chat. Well, a kid I work with, Andrew, I don't think he's ever been on the show before, but he recommended this barber to me, and I went to him, and he like sent me his, oh, hell yeah, Adam, sent me his address, and I pull up to it, and it's just this like house. And I was kind of like sketched out for a second, because I was like, am I just supposed to like go into my house and get my hair cut from this dude? But the guy ended up having like a little studio, hairdresser set up in his like garage shed in the back of the house. And he was like, yeah, come around back next time so you don't need to like come through the front of the house. But I'd only ever gotten my haircut like at a salon or at a barbershop before, never at just someone's private residence. So it was a little bit scary at first, but it worked out. I think he did a good job. It's because I told you? What do you mean? All right, we'll do one more of those. Let me pick a new sector. Let's do... what's a good sector here? Let's do your biggest loser in the financial space. Actually, the third biggest loser in the financial space is this guy right here, Futu. Today. Upstart is your second biggest loser in the yeah, I think that is someone pointed out the fact that Tesla was red today still. I think that is kind of not rare, but it's like interesting to see on a day where you would think growth would be responding well. The Qs are up 1.3%. Tesla, I guess Tesla's green now, but barely. All right. QFin. Yeah, Shelly, you're just using your screener. You're just using your screener. How can, Shelly, how can we make this guessing game like impossible to use with a screener? What if I said, guess the, what about just the worst performing like stock in the S&P 500? I don't think Benzinga Pro gives us an option to screen just based on S&P 500 companies. Shelly's saying she loves cheating. Burke B and Spiders fourth. That's fair, Michael Fian. We could do that. Damn, that one dude went quiet in the chat. I was curious what Deuce's takes were on why the market was higher, since he didn't believe the fact that the Fed numbers are lower today. The Fed odds that the Fed rakes. I still think the Fed's going to go 75%. Don't get me wrong, or 0.75%, 75 points. Don't get me wrong. I just think people are seeing the unemployment number tick higher and say, "Oh, hey, remember when Jerome Powell said that he wants to bring, or he that pain is going to come to the labor market?" Well, guess what? We're starting to see that unemployment ticking higher from 3.5 to 3.7%. That wasn't the expectation. The expectation was for unemployment to remain at 3.5%. That's not what we saw. It ticked higher. So now. Okay, and so in the 1970s, and when we kept seeing these headlines, okay, inflation at a 4-decade high or whatever, this is going back to the 70s, like the last time we saw inflation this high. The Fed adopted a policy that at the time was described as like stop and go, right? They were balancing high unemployment and high inflation and saying, okay, we can raise rates to tackle inflation, but that's going to make unemployment higher. And because both were high, they couldn't really decide which one they were going to tackle at the same time. So they were going stop and go. Okay, this month we're going to raise rates. Okay, this month we're going to cut rates. And you really just have to, be data dependent there. And that's where I think this Fed is heading, right? Because how are they going to say, oh yeah, we're going to keep raising rates as inflation's falling and unemployment's ticking higher? You got to think about the real world implications that's going to have on some people, right? As inflation's dropping, some people are going to get laid off because we're raising rates and to continue to bring that inflation lower. And eventually we're going to hit a point where they say, okay, now we can start, maybe laying off on the rate hikes a little bit because inflation is still falling. So we've been anticipating pain in the labor markets. The Fed is saying it loud and clear, right? That in order to bring down inflation, we need to see pain in the labor markets. But I really disagree with that, because their whole point, or I guess the whole point that people have been making, is we've never been able to bring inflation like this lower without a big recession. And it's like, okay, what's your sample size, right? 2-3 times in our history, right? Like, we're seeing right now that a soft landing is in fact possible, that inflation can come down while we're still adding jobs. But yet people have ditched that. Even the Fed, even Jerome Powell's like, yeah, soft landing's out the window. We're going to cause a recession. We're going to bring pain to the labor market. Why? Why is that necessary? Serena saying, I've been to one fancy apartment in NYC to see women. My best haircut was by Milkshake in the Hood. Very cheap, and I got a butterfly buzzing. Yeah, attention can be draining. Yeah, this dude, by far the most attentive, barber I've ever had in terms of, really taking his time. Okay. I'm going to go continue with the chat here for a second. DeRomo saying living through the 70s. What part about what the Fed was doing in the 70s, the stop and go, or that this Fed is heading toward there? I love, by the way, like, people disagreeing, because what engendered the stop and go. So but right now, right, stagflation would mean that we're seeing inflation increasing and growth slowing. I'm saying in this environment right now in 2022, we are going to have to see either, inflation coming down, which you assume would be, in conjunction with the economy shrinking and coming down. Okay, hold on. Stagflation, it doesn't... Okay, stagflation, it infers that inflation is not just high, but getting worse. That prices are rising while the economy is shrinking. That's the whole point of stagflation, why it's so bad, is because prices are going up while the economy is going down. That is not what we're seeing right now. We're seeing inflation coming down and the economy, like, pretty much holding steady, right? Adding jobs every month, like, doing fine, maybe shrinking a little bit, and then inflation coming... Wait, I'm getting confused. But you know what I'm saying, right? Look at inflation. It's not rising right now. Here, I'll go here. So you can't say we're seeing stagflation right now, because inflation's not going up. It's going down. You can look at any metric you want. You can look at the break-even prices. We can see it in 2 weeks when the CPI number comes out, right? But a month ago, Gas was $4.20 about a gallon. Now it's $3.80. Yes, I mean, gas got cheaper by 2 cents on average across the country overnight. The gas prices have dropped every single day, 75 days straight. Yeah, I mean, I was taught in econ stagflation. Yeah, no, Jay Rice, I 100% agree. One CPI number is not a trend. But I'm not talking about CPI. I'm talking about all the numbers I can look at outside of CPI, right? Food prices, gas prices, whatever. We will get the CPI number in 2 weeks. If anyone out there thinks, whether it's you, Jay Rice, Shelly, or anyone out there thinks that the CPI number in August CPI will be higher than July's, I'll take that bet. A friendly bet. We could put money on it, have someone else be escrow. Happy to take that bet. I don't even know what the expectations are. Shelly, that's not even true. They factored out for core CPI, but not the regular one. All right. Oh, I also did want to talk about this. We mentioned it yesterday on the show, but retail investors are getting super bearish, which has been a great indicator of times to go long. We can go back to, and I did this yesterday, the last time we were this high bearish was the week ending in April 27th, and we rallied pretty well off those lows. And when we talked to Steve Kalasian about this yesterday, Steve wants to see this number tick up a little bit higher, wants to see even more retail investors get bearish before he goes long. But I'm getting ready to get there, and I think right now, even with Yeah, I agree with that. I think too, I think basically my whole point was just instead of the Fed, basically even if the Fed is like their main goal is saying, okay, we're okay with some unemployment, we're okay with another quarter of a recession, we can see if the Fed is saying, okay, we're okay with some unemployment, we're okay with lower growth, we're okay with maybe even a recession the next quarter to get inflation under control. If that's their MO, if that's their motive, fine, so be it, whatever. I still don't agree with it. But I'm saying that they shouldn't be necessarily conveying that. They should say we're going to be data dependent, right? We're not going to, celebrate inflation coming down just because we got one good CPI print in July. Just like if August is 6%, then they're not going to be celebrating that, okay, inflation came down 2%, we're done with it. No, but that doesn't mean we still can't be cognizant. We still can't be paying attention to the fact that inflation has been cooling, has been coming down by however you want to look at it. Whether you're looking at CPI, whether you're looking at just energy, whether you're looking at just food, whether you're looking at just lumber or just car prices, or like the CPI does, all of these things together, however you want to look at it, it's cooling. I don't see how you can't take that into consideration when looking at some of these other things, because at the end of the day, how much of gas prices fallings are directly correlated to the Fed raising rates? Some people might say 100%, some people might say 10%, but that's the point. Is it's not an objective number that says, okay, these prices are falling because the Fed started raising rates, this happened. Some of these prices, could be normalizing through other factors. Is the Fed raising rates a huge factor of it? Of course. Of course. Yeah, and that's my point. Is they completely so the original goal, and this is just what I don't get, is that their original goal was a soft landing. People said it was impossible, never been done before. It starts to look possible, right? You have a lot of metrics showing inflation is coming down while the labor market's okay. And then they come out and say, no, there will be pain to households. And it's like, why? Why? Here, I got a good tweet from my boy Joey Dubs over at Bloomberg that kind of explains it well, I think. I gotta find it. And then our next segment here at noon, we will be getting into a market update. We will be looking at 3 stocks that I've picked out, and then some viewer charts as well. Oh, wow. I'm sharing my DMs with y'all as well. I was going to see my boy Joey Dub. Joe Dub. Yeah, this is so the fact of the matter is that we've seen a significant slowdown in inflation over the last few months, gasoline prices being a big driver, while the labor market has held up fine. Don't think anyone's declaring victory, but seems exactly what you'd hope to see so far. And that's my point, and is why I think like when the market rallied off of Powell's comments the other day, and they said, yeah, I wasn't saying soft landings have never been done. I'm saying that people have been saying before, we've never been able to tackle this high of inflation, 8% or higher, whatever, without bringing down or without some sort of recession. Not that there have never been soft landings. So I want to rephrase that because I did probably incorrectly convey that message. And so this is what basically what I agree with him with Joe here, and especially in the fact that when we rallied off of Powell's comments the other day, when they came out and said we didn't like the fact that the market rallied after, what was that? It wasn't Jackson Hole, after like August's FOMC or whatever it was, because they don't want to see people declaring victory. They don't want to see investors out on Wall Street buying shit up 20%, running Apple up 20%, saying, okay, we won. We tackled inflation. We're fine now, because they know, the Fed knows, we're not out of the woods yet. There's still a lot of things that have to happen there. My point was just more that, like, I can be middle ground here. I don't have to be, okay, so doom and gloom that we're going to see stocks crash another 30% and head into a global recession, or I'm buying everything and I'm bullish as hell. Like, what if I just think things are okay? And I think returns are going to be okay to moderate over the next year or so. Like, everyone has to have this huge, like ground shattering take, whatever. And it's like, but this was really the tweet that I wanted to pull up, and Connor sends response here. But recent data would suggest soft landing conditions are possible in practice. The question is whether it's possible in theory. So here's Joe being a little bit of a troll here, and I might kind of ruin the joke by explaining it out. But, we're seeing data that indicates we're kind of like landing softly, right? Inflation's coming down, jobs numbers are okay, whatever. But for some reason, the Fed is still thinking like, why, or the Fed is basically saying like, no, we're going to bring pain to households. So Joe's saying the question is it possible that the Fed believes a soft landing is possible and then we start heading toward that way? Or are they dead set that because what they've seen, that there has to be a recession, right? Because this never been done before when inflation's been this high, we have to see a recession. Connor's saying that the standard macro textbooks that don't account at all for a weird pandemic say it's impossible. So we should probably go with that. And then Joe comes in and says, the Fed has never been able to get inflation down from these levels without triggering a severe recession. Sample size, like 2 or 3. And again, and that's what to me, is tough, I think, right now with the macro environment, is that there are just so many people that are seemingly so sure of what's going to happen with the recession or what's going to happen with the market. And kind of the point that I think Joe and Connor were ribbing on there is like, we have a sample size of like 2 or 3. If you think that's enough to that a theory becomes fact and we have to do this because this is how it's been done before, all because of like 2 or 3 other times in our history that have been similar to this, it's not going to hold up for me a lot. Yeah, Jay DeRoma, again, like my point, my response to that, my refute to that, if we were debating right now, would be, then show me that. Then show me that. Show me that demand has cratered over the past year, right? Because I'm not seeing that. I'm not seeing that in any retail shopping numbers, in LuluLemon's earnings, in people buying gas at $4.50. I haven't seen one thing. I've seen the consumer sentiment drop, but people have still been buying. That would actually be a great, that would be a great way to like bring prices lower. is if everyone just said like fuck Kellogg's, we're buying generic cereal this month, and everyone like that was like a coordinated plan. I know I just hate that argument. Jade Roma hasn't, but that was the same thing that deficit hawks had been saying for years about inflation, right? But let's transition to our next segment. We're going to be taking a look at some stocks, some charts, and then we'll get into some charts from the chat. Let me go ahead and get my Benzinga Pro pulled up. I do see Jay Rice, I believe, talking about nuclear. We were talking about that yesterday. There was a big nuclear plant saved in California. A $1.4 billion, I believe, money going back into that plant to get it going, which is great news if you're someone who's a fan of nuclear or clean energy. I think nuclear is actually... JD's, my Twitter is at AaronBree5. I'll drop that in the chat. Always happy to talk some shop on Twitter. And then a quick rundown for the rest of the show. We've got about an hour left. We will be doing, like I said, some charts. And then we will be doing, let's see, be doing charts for the next few minutes. We'll transition. We'll be doing a meme segment here at about 12:30. I'm excited for this. So basically, what's going to happen is we've scoured the World Wide Web, various outlets. Whether you're talking, your 8chans, 4chans. We were on all the chans, looking for all the memes. Just kidding, we don't go on those. And we will be bringing on Aaron Thomas. We'll be bringing on maybe some other peeps from Benzinga. We'll be going through the memes. We'll be giving them ratings. We'll say what we think about them, what could be making them better. Oh, you were searching for Aaron Bree 6? No. The 5 is very important. So I was born on 5/5, May 5th. So that's why 5 has always been my lucky number. And then when I was a young kid, when I was 4 years old, Albert Pujols joined the St. Louis Cardinals wearing the number 5, and he quickly became. It was so funny because I picked him to be my favorite player when he was a rookie because he was number 5, and that was already my favorite number. And then he ends up becoming like the best baseball player of all time. All right, let's do our top 3 stocks of the day. First, I'm looking at Apple. Apple is the biggest weight in the S&P 500. It's my biggest holding in my long-term portfolio, so it's always the stock that I look at first when I wake up. Apple trading below $160 a share. If you guys recall, back in about, I want to say January, we were making new highs of $183. Apple became the first $3 trillion company in the world. Thing is just an absolute monster, absolute money-making machine. Although, what I will say about Apple at this point, as a trader, as someone who trades Apple is going to be more and more dependent on what the overall market's doing, on macro headlines, than it was maybe 10 years ago. Maybe 10 years ago, Apple blowing it out of the water with MacBook sales or iPhone sales would mean the stock would go up 5-10%. The company's making more money, growing fine. That's basically the expectation right now, is that Apple is going to make a lot of money, that Apple is going to, sell a lot of things, that Apple is going to continue to grow at a certain rate. So with all that said, right, with a certain amount of growth baked into Apple stock, the fact that it makes a lot of money, what do you need as like a positive catalyst to make the stock go higher? Well, we touched on one already, is the macro. 2 are real, true, new innovations at Apple. That's long been a knock on Apple, right? 10 years ago, people said, okay, right, well, what else can Apple really do, right? Everyone has the iPhone, everyone has, the MacBooks already. And what do? They continue to innovate, right? The AirPods have become a huge revenue stream for Apple over the past 5 years. I don't know what the next thing is, but I'd be remiss to bet against Apple here. From a chart perspective, we are in this little downtrend. I wouldn't be going out and buying it right here unless you're buying it completely as just a long-term investment, saying, I don't care if we draw back from here at all. We want to go back up a little bit more. But I do think this is one that if you're looking to kind of, I don't want to say bottom fish stocks, but if you're looking to buy stocks while they're in a downtrend, Apple is one you can do it on. Why? Because it's always going to have buyers. Doesn't matter what the headline is. Doesn't matter, really what happens macro. Apple will have buyers at certain levels. So I don't mind. Actually, I already said earlier, I would wait a little bit to see if maybe we can come hit some of these support levels. But again, if you're buying it for long-term investment, Apple, I appreciate. Enver, bruh, you ain't got to give me compliments on your birthday. It's your birthday, maybe. Your birthday, baby. Happy birthday, Enver. Everyone in the chat, wish Enver a happy birthday. Enver is, I would say, the hardest working kid I work with here at Benzinga. Always a pleasure. Never says no. Great kid. Great dude. RB, I live in San Diego. I test lots of visitors. Bars and restaurants are all busy. Gas is expensive and does not seem to be slowing down. Used car and boat. And again, that's been RB, I think, kind of my whole point. And you can look at, right, what you see anecdotally. And of course, San Diego is a spot that a lot of people want to travel to. A lot of people want to go to. So it might be different than, Detroit. But even, during the summer, right, and anyone watching the show that has been watching the show on a daily basis or often can know that we've said this, it's just so hard to read every single headline about recession and demand falling and all this. And then I get on a flight to go to work for Las Vegas and it's completely packed and every hotel is packed. And it's like, oh, all of these people out here must have not gotten the message about a recession. And so again, if you're on the short side here, if you're bearish, that's fine. And I think you can be bearish, but don't give me some doom and gloom argument that the whole world is ending and all this is over and that, I don't know. So it's going to be tough. Jay Rice, my big concern is rising rates make it hard to grow GDP because the interest payments on 33. My biggest, I'm just the most upset about is I think there have been times in the past, seemingly in 2015, 2016, when we were raising rates when maybe we didn't even necessarily have to, right? We were basically bypassing growth in the market, bypassing growth in GDP, bypassing investments into our country, right? Into infrastructure, right? You go, you see how shitty roads are all around the country. You see how shitty some hospitals and schools are, right? Interest rates plays a part in that. In a lower interest rate environment, you can afford to borrow more money and to invest into these places. And we bypass doing that a lot in the name of, we got to keep inflation at 2%. And when a lot of people argue, we could have kept rates lower and borrowed more money without inflation pumping up. Because you can see that at times in our history, we've been running a big deficit, right? Whether it's for a war or for some other thing where inflation doesn't rise. So there's this, the deficit myth, right? I think is something that everybody should read about, should learn about, because it's something that's not subjective. It's not political. It's all objective. It's all numbers and stats and math and stuff you can't argue with. That should really be the big headline of the day. Enver's birthday. All right, Apple was our first stock of the day. Second one, you could have guessed it. Tesla, TSLA, down 1.6%, showing weakness against the overall market. In our bull markets, Tesla had been leading the Qs higher, leading SPY higher. Today, showing the opposite. Tesla weak. I'm not a buyer here. Let me know in the chat, 1, if you're bullish Tesla from these levels, 2, if you are bearish. Patrick Starr saying Apple gaming console. I don't know. Apple probably will find some way to get into gaming as it's, especially as the gaming industry continues to grow. I'd be surprised, I think, if Apple put out their own gaming system to take on Microsoft and Sony. What I could foresee more is Apple trying to do something different, right? Maybe they do something with AR, VR, right? With our phones, where it's we've already seen Pokemon Go kind of be a really cool iteration or integration of augmented reality on cell phones, and there's some other things doing that. So I do think Apple will have some sort of innovation in the gaming space. They already have, but I think they're not going to put out a iBox to compete with the Xbox. I don't think. I think if they did, they probably already would by now. But back to Tesla. You know, I think even if the market does okay here, I think even if the market does okay, like I said earlier, like what if, you know, we don't have to be super doom and gloom? Like, what if things are like, yeah, the economy's not booming at full potential, the market returns are just okay. I think in that environment where like we're just choppy, where things are just okay, you know, I think in that environment, Tesla stock still continues to move lower against the overall market. Why? Because it's still more expensive than other stocks on the market. So in expensive stocks do well in high growth environments. Even if my whole point in disagreeing with what the Fed's doing right now is I'm basically saying, like, I don't think we're going to go back to that high growth environment for a while. I don't think we're going to go back to, you know, QE, quantitative easing, to companies like Upstart, to companies like Roblox going up to here. You know, this is the environment that Tesla stock does well in, when companies like Roblox are getting run up to 140, or Peloton, right? When Peloton's doing this, Tesla stock is doing well. I think for the real companies, for the companies that are out there that are actively making money, you know, your S&P 500 companies, it's completely reasonable to expect just some average to meh returns over the next year or so as we, you know, finally quell inflation, get all these things. Doesn't mean we have to see some huge worldwide recession and, you know, SPY's going to go to 200 and we're going to be back to, you know, COVID lows and all these things. You don't have to, even though people on Twitter and social media, you know, take the most extreme position, doesn't mean you have to. What's the House of Hammer? I have no clue what this is about. Oh, Army Hammer. Dude, I don't know. I don't know anything about Army Hammer. Like, is his name actually Army Hammer? Like Armin Hammer? Isn't that a different person, Armin Hammer? I know, but isn't there a different... Well, I know that. I think there's a person I get confused with Army Hammer. There's like another person with a weird name that's like also I don't know, weird name. All right, Shelly. We'll be on opposite sides there. Respectfully disagree. Well, I guess if honestly, if the Fed keeps hiking rates and screwing things up, then potentially. Oh, exactly. Thank you. His grandfather, Armin Hammer. That's who I was thinking of. He was also you know, he was a business. Oh, Oxy. Yeah. Okay. This is okay because there's this whole Warren Buffett, Armin Hammer connection in my head. I don't freaking know. I will watch that though. He's got a yeah, that's I understand. Like, well, trust me, I am reading, you know, articles and whatnot put out all day by people, post everywhere. I understand why people are bearish right now. I understand why people think a recession's coming. I understand. I disagree, and I think historically, you know, betting against kind of what the public is doing, right? What the sheep per se are doing. I'm not saying anyone out there that's bearish right now is sheep, but I'm saying historically in the stock market, if you're going against what the grain of what retail's doing, you're doing all right, especially in bear markets. And, you know, I think that trade will get very, very crowded, right? The short trade on some big recession come in. And then guess what? If that trade gets crowded and those assets don't move lower, what's going to happen? You're going to see a big move to the upside. Arm and Hammer. Benzinga saw change in open interest and option change. Are you talking about, is the ticker you're talking about saw? We do have, I had one more stock to look at today. Actually, Shannon dropping the thing about the Army Hammer documentary. Good lead into that because it was Oxy. I did buy Oxy the other day. Getting kind of killed on it so far. I bought it up at like 73 and now it's down to 69. But having a green day today after a couple red days in a row. Yeah, I don't think SAW is a ticker. I don't know really what that... SPX at daily neckline. Watch your longs. The other stock, watching on. I was talking about this one all week, basically. Swiss shoe company, bought some of it. Still moving lower. I thought this was going to move higher off of Lulu's report, right? I think Lulu and on are like the same company, basically. Just one makes clothes, one makes shoes. Oil oversold. CRM, Salesforce. We should have talked about this one yesterday when Luke was on. We talked about a number of different stocks that we are customers of here at Benzinga. We pay Salesforce, right? We pay Asana. We pay HubSpot. So we do have an understanding of like how much these companies cost. Are they raising prices? How much, how much of this, how much do we need this product? How much is this like important to our business? So CRM is one that we use every day. We use Salesforce and Slack every single day. I think that even though COVID, people are going back to the office, all this growth from COVID has been pulled forward and now we're trading below. We're still moving in that direction, right? We're still moving in the direction that every company is going to need Slack. Every company is going to have remote workers. So I like CRM in the long run. And I like the fact that looking at this chart is it's well below its pre-COVID levels. Well, I guess kind of, right? Because you can see here that this was getting a run up into COVID. So here's what I anticipated happening. Well, I mean, we were making new all-time highs here in the market anyway, so it's not like crazy to see this like growth stock coming up higher. But probably some of this buying is people saying, okay, we're going to buy this kind of telecommunications stock as this global virus is spreading. I think, at least. I don't know for sure. But then you get the crash where just everything crashed because it's like, holy shit, okay, maybe this thing's worse than we thought. And then people realizing, oh, people are working from home? Oh, this company's like a work from home company. All right, that's doing okay. Then you went from 160 pre-COVID to 288, right? Then you make new highs in November 2021, 310. Now you're back down to 157. Yeah, I know, JD's. Thanks for pointing this out because I like this. All right, we've got about 5 more minutes left in this segment. So if anyone has any stocks they would like to check out, we've got a few minutes before we transition to the memes segment. Yeah, Shelly, look, I'm not trying to really argue with anyone. I come up here and I give my opinion. I try to be transparent when something is just my opinion versus when something is like an objective fact, right? I'm not saying objectively, factually, we're not heading toward a recession. I'm saying I don't think things are as doom and gloom out there as some people are making it out to be. And I think there's a lot of reasons to be optimistic right now. I'm not saying that in the sense that I think there are a lot of reasons to be to think like, oh my God, we're gonna be back at all-time highs by the end of 2022. No, but just saying, hey, we have done well, at least in some I just saw an article about US food prices falling, right? Chicken wings at the price of before pre-pandemic levels, right? We're going to talk about gas prices with Patrick Tahan here in a few minutes. So I'm really anticipating this CPI report to come out in 2 weeks. I mean, what's going to be the argument if it is 2% lower that we still need to be, causing a recession to bring prices down? We'll see. We'll see. Happy Friday, value in time. Trip D will be on, well, actually, I don't know if they are doing at the close today, but Triple D is on pre-market prep and at the close. Usually not on this show, but that's a good idea. LQDA. Liquidia. I don't know this one. LQDA. I don't know anything about this company. Liquidia shares are trading higher after Needham maintained a buy rating on the stock and increased its price target from 12 to 16. Well, if you're an investor, you love that. All right, so first thing I do here in Benzinga Pro, pro.benzinga.com for your free 2-week trial. Liquidia Corp is a U.S.-based biopharm company focused on the development, manufacturing, and commercialization of the products that addresses unmet patient needs, with a current focus directed toward the treatment of pulmonary hypertension, PH. It conducts research, development, manufacturing of novel products by applying its proprietary print technology, a particle engineering platform. Is particle spelled wrong here? Is that how you spell particle? To enable the precise production of uniform drug particles. I guess it is. Designed to improve the safety, efficacy, and performance of a wide range of therapies. All right, so I don't really know what they do. But let's look at the chart, man. Or woman. Let's look at the chart, fam. I don't really have a read on this, to be honest with you. I don't usually trade these like pre-rev biotech companies. Up 17%. Looks like it's gotten pumped up a little bit. I don't know. I mean, I don't have any directional sense on this. MS green candles. Morgan Stanley. Shelly, how would I type that? I'm on the stream right now. I'm literally working. But you did say, okay, bye, calm before the storm, something, and then continue to post comments. So I was just curious. Again, not me, but I was curious. All right. It is time, unless anyone has any... Is that true, Robert, that rent is 30% weighted in CPI? I have no clue. Probably a quick Google search. How much does rent make up of CPI? Or how about just CPI rent? Yeah, I will say I've been wait, what? What does this mean? No, Shelly, I don't want you to leave. I was just saying. In English, we're burning money on something that if it works, you couldn't afford anyway. I don't know what that's referring to. I don't necessarily agree or disagree, again, because I don't know what that's referring to. Yeah, I mean, I know property prices have begun to drop. So you'd assume that also means with rent prices. But that is a good point, Robert, that does seem like the inflation would be more sticky with something like rent, because people only sign about 6-month or year-long leases. So if someone's rent is 20% higher than it was a year ago, that's going to be a big part of CPI. But I think across the board right now, looking at other things, looking okay. I mean, it's just so funny to me, like the people like the OG, like Peter Schiff's, people that started freaking out inflation before everyone else. It was all lumber prices. Remember, like there's a really funny like meme picture of Ben Shapiro out at a Home Depot with a block of wood, like, and he's talking about how expensive wood is. What's happened to lumber prices since then, right? Can we get a chart of lumber futures here? Here, I'll pull one up right now for you. Everyone who was freaking out about the price of lumber shuts up about it once the prices normalize, right? Let's look at a 5-year. So here's what I'm talking about. In May of 2021, this was more than a year ago. This is 16 months ago, right? Before really we saw crazy inflation. Look at lumber prices. $1,400. Crazy. What's it at now? $483. Those same people that we're talking about don't talk about it because they moved on to gas prices. Now gas prices are falling. So they'll move on. But it's like, all right, here's the thing. These markets, what's going to happen in the free market, what's going to happen? They're going to stabilize. They're going to come back down. And we'll talk about with Patrick Dahan with gas. Yeah, and that is true, Charles. And I have been, so, okay. Yeah, Aaron, we're ready for memes, by the way. I have been, me and my roommate and I, our landlord is trying to jack up rent on us right now. And we're looking for new places. And a lot of the apartments I've been looking at have been dropping their asking rents on Zillow over the past couple weeks. So that's good news to me. Again, that's all anecdotal. Again, I'll try to be transparent about like what's subjective factor. Now, I'm sure, maybe actually I'm not sure, but I wouldn't be surprised if you told me from a empirical data standpoint, rent's still rising. But what I've seen anecdotally here in Michigan, rent prices have been falling. People have been asking less for the same apartments over the past month or so. Yeah, I saw that too, which makes no fucking sense to me, right? How, if you're, I really think if, and again, this is, people would freak out about this, calling it socialist, whatever. If I were in charge, I'd make a rule that as a landlord, you can't jack up rent by more than what the CPI is, by more than what inflation is. It makes no sense. If you want to say as a landlord, okay, everything is getting more expensive, I have to raise your rent, okay, that might make some sense. But if CPI, if inflation's 8% and they're trying to raise your rent by 20%, then you're saying, okay, you're not just trying to match inflation, you're being predatory, especially when you're talking about people in mobile parks. Some people in mobile parks have had their rent skyrocket up to 100% over the last like 5 years. And I think a lot of that was happening before COVID even too, and then they were able to use that as an excuse. Again, I would support some sort of regulation like that in a heartbeat. I don't think most people would. I think most people would be against it, call it some sort of, government overreaching, whatever. And so that's why we'd still rather have, I guess in like capitalist fashion, landlords fucking over people in trailer parks, but at least, it's not the big bad government. All right, transitioning now into the memes segment. We're going to take some different memes we've scoured throughout the internet. Oh, JD slid into my DMs. Hell yeah. Anyone's welcome to slide into my DMs.
So to be clear, we have 5 memes today, and we are going to be ranking them basically.
Hell yeah. Yeah, and it's the same as from an individual like perspective and companies, right? Greedy people or greedy companies doing it because they can. Like there are a lot of companies out there that have raised their prices because their input prices went up that could probably drop those prices a little bit now, but they don't have to, so they're not going to. So if landlords can squeeze an extra few $100 out of all 10 of their tenants, why wouldn't they? And Jay Rice, I don't know. I think rent control apartments in New York work I pretty well for New York, I think. Look into that more. Not sure. All right, where are the memes at? Let's get the memes up.
The memes be coming up right here. All right, so at number 1, we have our first meme of the day, and I just wanted to preface this by saying that these, of course, have been provided by our meme dealer, the one and only Michael Feehan. And so if you have complaints about these memes, or if you love them, you can send them to Michael Feehan. Let's get started with number 1, about the one and only Leonardo DiCaprio.
Okay. So
wait, I need it bigger. I gotta.
All right,
That
here's
is
what I'll
what
say
she
on the
said.
Leo memes. So the Leo memes went crazy on Twitter for about like a full 24, 48 hours. I would say even more than the typical, longer than like what the typical meme timeline is for Twitter. Usually things are like in and out of the Twitter consciousness within like 12 hours. Leo stuck a little bit, but very quickly people have wait, who's the young male intern? Nick Brown? Serena, you gotta be careful. So he's only 16. Just saying. But anyway, people were very quick to go, like a tweet I saw yesterday, which had like 150,000 tweets, was like, hey, does anyone know where I can go to see 100,000 tweets about Leo that are different but all identical. Like, I think people are just like, all right, everyone's making the same joke. I will say I saw one that I really liked that I thought was really funny that wasn't this one.
What was it?
It was a clip from Succession. I'll find it real quick.
Okay. Succession.
One of the funniest
can't even
things
say it.
I saw was
Succession.
like just the data. There was a chart that someone pulled, and I'll see if I can find it, where it was like corresponding data.
Yeah, I saw it on Instagram like 5 minutes after you said it. But the chart shows all of Leo's past girlfriends and the timeline that he broke up with them and their age.
Here we go.
It's quite hilarious. Yeah.
So if you can take a look here, you'll see that basically each one of these relationships reaches a peak, and none of them have surpassed the age of 25, which is
There's some that have hit that 25 mark, but as soon as they go anywhere near it,
the
they're gone.
contract times out.
Yeah.
Okay, boys, what is your ranking for this meme?
Wait, here, I was gonna play the one that I liked first, and we'll get back to that.
Okay,
so.
good, do that.
She's 1,000,000 years old. It's fucking disgusting. She's 1,000,000 years old.
So yeah, I'll give that one, the one that you shared, a 5 out of 10.
Yeah, I'd say around there. 5 out of 10. I feel like, they could have used a different meme to kind of showcase the emotion. That could have made it a little bit more funny off rip.
Yeah, I think out of the different Leo memes, that one was not great.
Yeah. All right.
So, okay, I will talk about this for a second, too, value and time. So, this one, the Vitalik one will be missing. I made an executive decision here that I don't think it's really... I don't know. I thought about it in the frame of, like, if roles were reversed and it were a female developer and, like, a similar picture like that went viral, would it be appropriate? Would we be doing the same thing? And said no. So I don't think we should do that there. But I'm not saying... you can't have fun with it or make it fun. I just saying I made a decision not to bring that up, show the picture, talk about it on this show.
All I'm gonna say is if that picture was a reel, then he has nothing to be embarrassed about. My man was packing. Heat.
No, I know that's not, I'm saying that's not the okay.
Wait, I'm lost.
So there was a picture of Vitalik that went around Twitter where you could see.
Is it Vitalik or Vitalik?
I don't know how to say his name.
Whatever.
Doesn't matter. You could see an outline in his pants.
Okay.
And it was getting shared a lot.
Was it his crypto wallet?
No. It was it was. You can look up the picture on your own time. But basically, my point was if it was like a revealing picture of a female and people were sharing it around, people would be like, "Oh, that's like not cool," whatever. And so
I don't know. That's that's all press is not bad press. So
no, okay, but like, all right. So I'm thinking about the like the Lily girl from AT&T.
Yeah.
Remember how she went viral a couple.
I love Lily.
See, and then she came out and was like, guys,
shout out Lily.
She's like, guys, this isn't cool. See, she's like, that's not cool. And so I'm saying, like, if
I think she's a great actor, a great brand person for AT&T. Good job, AT&T.
All right.
On to the next meme.
Let's move on. Yeah, let's move on to the next meme.
All right. Okay. This one, I'm not gonna lie, might be too advanced for my brain, but let's check it out.
It's so over for Tom Brady. Kramer's quarterback.
Oh, he's just...
I get it.
Yeah, I mean, I think he's just saying that...
It's just like go against Kramer is the...
yeah.
Is
basically.
the... Yeah.
That's where I think the same thing with kind of the Leo thing where it was like, do you want to see 100,000 tweets that are the same but different? It's like, I think the whole Jim Cramer gets stuff wrong is like, it has gotten so overblown because it's... I don't know. He's on TV every single day. I can cherry pick all the things he's gotten wrong, or I could do the exact opposite and show you all the things that he's gotten right. And if like I could write, 100 articles and say, okay, if you bought Nvidia when Jim Cramer said to buy it, you'd be up 1,000% right now, right? And it's like that's just not what the mob mentality is. The mob mentality is fuck Cramer. He's always wrong. So that's what's hot on Twitter. I haven't been a fan of it really since it got big.
You know what I'm wondering? You know how Kramer's wife loves the Baconator?
Yes, Wendy's. Yes.
Yeah. So is Wendy's public?
Yes.
Okay. whenever I want to set up an indicator, or we should set up an indicator for whenever Kramer talks about his wife's love for Baconators and the correlation to the price of Wendy's.
Yeah,
That'd be hilarious.
for sure. Yeah, I know there was one specific like it wasn't even just a meme. It was like an actual like data spreadsheet of like all the returns, and it was like literally like 100 stocks and all were red. And it's like, all right, this person obviously went through and cherry picked like all the bad stocks at Kramer. Like there wasn't a single green one when he's on TV talking about stocks every single day. Like it was very very no, I think it's funny. I was just saying I wasn't ever like in the all right, I'm gonna make this like Kramer joke because just because I felt like it was old. I just felt like everyone else.
It's just like an easy target
Exactly.
at this point.
It's like, oh, we're gonna make a joke about like, you know.
I feel like you gotta put out at least one Kramer joke every so often. I'd say like maybe 2 to 3 months, just to stay relevant on your timeline, right? Just so you could stay with the crowd, stay with the flow. Like, all right, Kramer again, boom, boom, and then move on.
All right, let's get to the next one. We'll give that one. I'm gonna give that one a 3 out of 10. I'm going lower than the Leo one.
Yeah, I get
That one was a mild meme at best. Yeah.
Yeah.
All right.
All right,
next
hit us with the next one. What do we got?
Another Kramer one.
Another Kramer meme. Twitter Blue adds an edit button. Jim Kramer gets wrong predictions. Yeah, another one. I mean, this is from the Iron Man scene. Yeah.
I'll give it points for like the face
Like,
he has.
again,
and stuff. It's
again.
pretty funny, but
Yeah, again, easy
It probably
target,
took
easy
some
tweet.
like effort, right?
yeah, you have to give applause for the effort. You know.
Yeah.
I mean, okay, and if you go by just the indicator of, Twitter performance, 266 likes. It's not nothing, but I mean, Aaron Bree has more likes than that. So,
True.
all right.
What was your most popular tweet recently? It was where you roasted the one or the scammer. That was so
Yeah.
funny. What a great thread. Great thread. All right, this one falls in the same category as the previous one. That's a 3 or 4 out of 10. It's a be more original with your tweets.
All right. Next one.
All right, next one. Let's go on to the next meme here. Analyzing Peloton stock. Can we like click into that picture there? There we go. Show us the real image.
All right. It's just a bike with an iPad. It's a high margin software business. You just have to acquire the hardware first. It's just a bike with an iPad. I like this meme a lot.
Yeah, this is a quality meme.
That's good. That's good. I like that it pays homage to the old style memes, back in like 2010.
Oh yeah, these have been those have been hot coming
Yeah.
back. These type of I don't even know like
the
that style.
Pepe memes or the whatever it is.
Pepe Le Pew.
No, the LE asterisk,
It was like
Le laugh or something. I don't know.
Yeah. Le meme.
Le meme. Yeah.
That was such a dark day of like memes in like 2010. when it
Bad
was,
luck, Brian. Oh man.
why you know?
Yeah. Table flip.
Yeah, the why you know like eating. It was like iFunny memes, like eating cereal, like
Yes,
spitting it out.
iFunny. Oh my God, you remember iFunny?
Oh yeah,
Dude, I used to spend like hours on iFunny.
Egregious
like,
amounts of
all the
time.
time.
You
Yeah.
had to in like 2010, so you weren't cool.
2013 though.
What's our ranking on this one?
I'll give that one a 7.5.
Yeah, I like the classic
Because and I
homage
also
stuff.
like the fact that I was always on I was on one of the two sides. You can pick if you think I was on the low IQ or high IQ side, but I was always on the side where like I was like, I don't get it. Like because the whole thing with Peloton, right, was someone had to buy the expensive bike, then pay like a monthly subscription. I was like, at that point, why not spend less money for a gym membership where you're also going to get access to 100 stationary bikes and all these other things? It's just-
Peloton, honestly, they should move to VR. I think that would probably be
well, they
their
kind
next
of did,
move.
right? That was like one of their things was like you can take a bike ride in the,
But like,
Congo desert,
yeah, they
wherever
should,
you are,
but
I
they
don't
should
know.
sell you, or they should have their own proprietary goggles that you're able to put on and then transform you into a different space. Have all your friends meet you in this virtual world and then start riding bikes and stuff.
That's interesting. I don't think it's like I don't know. I think it's more of a concept than anything. Like I don't think it would be adopted super quickly. but also it kind of just reminds me of you guys see that thing where farmers were putting VR goggles on their cows to like make them less depressed?
Yeah.
That's what it reminds me of. Like, oh, you're working out. Why not work out through a virtual field? Like,
I want some VR cow milk.
oh my god. All right, next meme. This one's kind of a weak sauce one. I'm not gonna lie, boys. Let's see it.
Oh, there we can see it.
All right, click into it. Click into it.
It's just when you buy the dip and it keeps dipping.
Yeah, the Homelander meme. Okay.
Gotta love Homelander, but
Yeah,
yeah.
not bad.
All right.
This one's like a 5, 6.
Okay, I'm gonna stop my screen share for a second because I have one more thing to share. Someone in the chat commented about how they like corn on TikTok, and I don't know if they're referring to questionable content on TikTok or if they're referring to the latest craze of corn. So I'm gonna show a piece of content that we put out yesterday. Just had to click share system audio so we can see that. All right.
We make a corn meme or a corn video.
We did.
Oh.
We did. So
I'm so
for
confused right now.
It's got the juice, man. Just
it has the juice.
all right. What are we?
I really like corn.
What do you like about corn?
It's really quiet.
A big corn with knobs. It has the juice.
No sound.
I'm so confused. What does this have to do with corn?
Did you not
You don't
see
know,
the corn
he doesn't
kid
know
on
the
TikTok?
trends.
No, I did see the corn kid on TikTok, but I don't see how that played into that.
I think he just used the video, the sound.
It's like a trend.
Yeah.
There's like other companies doing that and stuff like that.
Yeah, the corn kid.
I was gonna make a joke about it. Or go ahead. What were you gonna say?
I was gonna say if we reviewed a corn kid meme, I'd give that an immediate 10.
So basically, the whole meme was this kid at Chipotle didn't want anything besides when he got to the corn.
No, it's not that.
It's not a Chipotle.
It's not a Chipotle got him after he went viral.
Oh.
But basically, someone just like went up to him and just started asking him, "Hey, man, what do you love?"
Okay, I
And
haven't seen
he's
the
like,
original. I thought the Chipotle thing was the
No,
original.
no. Yeah, he's like.
I was gonna make a joke about it on the Chipotle video because I was like, "Damn, they got even the Chipotle workers wearing body cams now." Because it looks like it was like a Chipotle workers like making his bowl and they've got like a body.
You only
camera
saw
on.
one
No,
of
no,
her.
so that's a huge thing right now because there are programs in these companies like Dunkin' where they will like basically hire people to be regular storefront employees, but also be their like influencer or whatever. And it's like an additional thing that they do, and they just make content out of their experience at working there because it's such a huge category on TikTok. So it's kind of crazy. They have like grants for it and stuff.
All right, I do see our guests hanging out, so we're gonna have to cut the meme segment short because we only got about 12 more
Well,
minutes.
actually, the meme segment is over officially.
All right.
So
Well, yeah. As always, let us know if you guys had any feedback in the chat. Always going to be.
Yeah, we got to make it a little better, a
Don't
little bit
ask a
more hype.
borderline boomer to get you memes for your show. All right, Michael. We'll find someone else to get our.
Yo, what
memes
happened
next
to
time.
13?
13.
Yeah, what happened to
whatever
13, man?
He disappeared.
he's around.
He came to the office. He came to the office one time, and then
All right,
after that, he
we
like
gotta
dropped
wrap it
up.
up.
All right, fine. I'm out of here. Peace, everybody. Have a great holiday weekend. Enjoy.
All right, guys. We're gonna bring on Patrick Dahan. Dahan? I don't know. Ask him how to say it when he comes on. Been trying to get him on for a few weeks now to talk about the gas market. So excited that we finally get a chance. We still got a hot mic somewhere, by the way. So without further ado, only about 10 minutes of the show left. Let's give Patrick our special intro and bring him on the show. Patrick, how's it going?
Hey, thanks for having me. It's going good.
No problem. Thanks for finally hopping on the show. So I'll give you some background. So Benzinga Live, where we're covering everything in the financial market, stock market, crypto, you name it. Of course, over the past few months, gas prices have been one of the biggest things in the headlines. Maybe a little bit less so over the last month or so. So as someone who's watching gas prices consistently, was it surprising to you to see that become like the national forefront news in the headlines? Was it exciting, or were you like always like, oh, we knew this was going to happen?
I think as an analyst, it's always exciting when things are on the move, right? I think it's when things go static that it gets a little boring because nothing changes. But we live in a world that's changing very quickly. I would say, earlier this year, it is surprising to see the degree of decline. It's not unprecedented, but obviously, when you go very high, there's a lot of room for the market to overcorrect, and I think that's what we've been seeing. So after hitting $5 a gallon in June, I think the market's cooled off a little bit too much. A lot has changed this year, from liquidity to prices to the threats, and I mean, oil inventories are still relatively tight. So all in all, as we approach Labor Day weekend, gas prices have been on the decline, and just wow. I mean, there's so much. We could probably talk for hours about gasoline, diesel, natural gas in Europe. Right there's just no shortage of things to talk about when it comes to energy markets right now.
Yeah, no, and I love talking about the energy markets, and like you said, we could probably sit here and talk for hours, but we've only got about 10 minutes. So I'm gonna ask you what I think may be some, I don't know if I would say hard questions, but I think questions that I'm curious about. And I want you to, all right. So I'll start with this one. What percentage, and like ballpark it, right, from 0 to 100%? What percentage of who's in office as president like matters to what gas prices are doing? Is it 100% dependent on who's in office? Is it 0% in your mind?
I think it's increased over the last couple of presidencies as we've seen kind of more of this social movement, this ESG movement, right? So I would say that maybe 5 or 10% overall, really small, but there is some agenda, some policy that can have an impact. But usually, keep in mind too, it's not just the percent, but it takes years for policy changes to really start changing the shape of the future. And I think that's where a lot of people get it wrong, because that number will grow over the years. But for now,
Oh, looks like we lost Patrick for a second. Let's see if he's able to hop back
there,
in.
but as we progress, I think the impact will probably pick up and accelerate in the years ahead. But for now, it's still rather insignificant compared to all of the other factors like COVID, like Russia's invasion of Ukraine, right? That's really the high level items that are pushing the markets.
Yeah, and so similar question. As far as gas prices falling over the last, and do you know off the top of your head? I mean, isn't it like 70 days in a row now at this point?
Well, according to other sources, I think it's 80 days. Although Gas Buddy data, which we get 11 million price reports a week, so I think we have a lot more sensitivity. We actually did show a day where we went up about 0.7 of a penny, so it's insignificant, but there was a price movement there.
Okay, so we can't
data,
hang on.
Broke it. Yeah.
All right, so we can't hang on to that 80 consecutive days, but we can say for all intents and purposes, for the last 2.5 months, gas prices have been falling.
Yeah, on a weekly basis, it's 11 weeks. The weekly streak has continued. It's just the daily streak. It's going to flex, it's going to bend. But right now, by the way, we are at a consecutive streak that's 1 week longer than the time that we saw a decline from COVID. So this is substantial.
No, it is. And so that was going to be my next question, is kind of, similar to my first question, and what percent, do you think the president has? What, as far as gas coming down over the last 80 days, what do you attribute that to the most, right? I know there's a multitude of different factors, but like if you had to boil it down to these 3 factors, what would it be?
Well, I think a lot of it is concern over the economy, right? The Federal Reserve raising interest rates at a pretty accelerated pace is catching a lot of people off guard. It could bring us to the point of a steeper recession, a mild recession. I think that's what people are arguing about, right? That what is the degree of the recession or slowdown going to be? It's not going to be that we're going to slow down. We absolutely are. So I think markets are obsessing over how, suddenly very quickly overnight, we could go from, a high inflation to the Federal Reserve choking off growth at all costs. And that could cause a downward spiral in global consumption. Not only that, but China's been fighting this COVID battle, right? No COVID or zero COVID policy, in which they just continue to shut down wide swaths of China, major cities. And that very quickly puts the kibosh on oil demand. So we're kind of fighting multiple different areas here, but a lot of the downward pressure is because of a potential slowdown or recession.
Yeah, and I think right now, that's where we've been basically, or I've been talking about, arguing out all day, is like, where is the Fed? Like in your mind, kind of my point that I was making was, we have data out there showing us that inflation is cooling, whether you want to look at gas prices, whether you want to look at other prices. With that said, Like, when is the Fed going to say, okay, maybe we don't need to, as you said, choke off all this growth? Maybe we can, try to facilitate some growth while still having inflation cool. Like, basically, at least in gas, because that's your expertise. Do you think that's I guess, like, realistic possibility, or as soon as the Fed, gives any sign of, okay, maybe we don't need to be this hawkish, then gas prices are going to shoot back up?
Honestly, I think a recession may be kind of the great reset, right? The inflation rates have just been out of control. I think we'll get there maybe 2023 or 2024, where a slowdown will allow the economy to reset. At the same time, the fact that this could transpire for 6 to 12 months means that oil production could start catching up to where we need to be, right? So a recession, I think, could be a great reset for the economy. Obviously, there have been a lot of imbalances, right, coming out of the pandemic. And we went from an overheated market. Now we pull back and allow the economy to reset and hopefully allow a lot of industries, including the oil industry, to catch up on where we should be. And maybe this will continue. That is, a recession or a slowdown will continue into 2023. And I'm hopeful then, obviously that's a year away, that maybe Russia's war in Ukraine will have ended. I'm hopeful. And that will allow ties to normalize, or even better, regime change in Russia. I don't think a lot of U.S. oil companies are going to jump right back in bed with Russia, even if there is an end to this. So there's a lot of questions, and a lot of it has to do with how long the downturn or slowdown will last, and whether or not Russia is going to exit Ukraine at some point.
Yeah. So I want to go over real quick. This has been a great discussion so far, by the way. I want to go over real quick, and this might be kind of stepping outside your comfort zone, but we talk a lot about different energy and gas stocks on this show. And I'll just, I don't want to ask you too much about it, but I'll give you kind of what I've been thinking, and I want to hear your thoughts on it. Is that basically, and we were just talking about the potential that we run into a recession. My thought process on it, and we've seen, Chevron and Exxon stock come down a lot from here, is that if you think we aren't going to go to recession, that some of these stocks might be buying opportunities right now, because prices, even if they continue to come down, should remain pretty relatively high if demand holds steady. And then that would mean that those companies report good profits, right? If Chevron is still selling gas at $3.70 for the next year and demand holds steady, that should be good news for Chevron. But if you're in the camp that thinks, okay, we are going to head down a recession, demand's going to get crushed across the board, then maybe you shy away from these stocks.
Yeah, I think there's something to be said that this recession, if we officially call it that, is going to be much more shallow, right? We saw a really healthy jobs report today, and unemployment looks to keep coming down, although the rate did jump up a bit. So from that perspective, there may be a buying opportunity in the short term. I don't think Europe is going to get much better ahead of winter, right? That's the biggest question in the short term. We're still in an energy crunch, and we probably still will be through the winter, 6 to 12 months, maybe beyond that. In the long term, some of the ESG moves, the EV moves, the government spending on EVs and infrastructure, that might be a little bit more bearish for the long term. So there might be some shorter term opportunities. And obviously, you talk about the midterms, the control of Congress. That could set the agenda moving forward, and it could also set the pace of some of the movements towards electric vehicles. And that could be a little bit bearish for the long term. So I think in the short term, there's no argument. I think energy prices will remain in this boom cycle, and that could continue for the next year or two or beyond that, depending on Russia's invasion of Ukraine, right? How they play games with natural gas supply. I think that we could be bullish natural gas and energy into 2024, maybe 2025.
Yeah, it seems like more and more natty gas is clearly going to be kind of that stepping stone that we're going to be reliant on as we head more toward renewables. We've only got about a minute left, but Patrick, my last question was going to be just about that kind of move toward, move away from oil and gas. Obviously, you're following the gas markets. This is what you do. How do you see kind of like, my question is going to be, do you think these gas companies, your Chevrons, your Exxons, all of them have already started allocating some resources towards some clean energy? Do you think these companies survive in the future? Do you think they are putting adequate resources that way, or they're going to go, to the wayside if we ever get completely off fossil fuels?
I think the popular opinion is that the EV transition is going to happen way faster than what reality is. Look at California, right? California is begging Tesla owners not to recharge their vehicles because guess what? There's way more transition that's happened the grid and the power requirements aren't there yet. So I think everyone wants to push EVs as quickly as possible, right? It's sexy, it's popular, but the reality is going to be constrained by power. And, only now are we starting to talk about going back to nuclear. And that's really, I think, a big piece of the puzzle, but that's 5 and 10 years away. So a lot being said about the transition to EVs. I don't see it happening as optimistically as California and the European Union do, right? The ban on internal combustion engine vehicles. ICE vehicles are going to be around as long as I am. The transition may happen in the next 10 years in the bulk of vehicles, but we got to be talking about massive investments in the grid for that to happen, and we haven't really seen that yet.
Yeah, 100%. I think, like you said, it's going to take longer than people are anticipating. Patrick, well, man, it was great to get you on. We've been wanting to talk gas prices with you for a while, so we'll have to get you on as this story develops, because I know there will be more developments. This won't be the end of the energy, crunch, as you said right now. So hopefully sometime in the next couple of weeks, we'll get you back on.
Hey, really appreciate being here. Have a great weekend.
You do the same. Enjoy the long weekend. All right, guys. Patrick the Hand, Gas Buddy on Twitter. I'll drop his Twitter in the chat. Everyone go ahead and give him a follow if you care about gas prices. 1:01 p.m. I got to wrap up or else Mitch is going to start yelling at me. But hope everybody has a great long weekend. While you're on Twitter giving Gas Buddy guy a follow, go ahead and give me a follow as well at AaronBree5. We will be back on Tuesday, not on Monday. Everybody enjoy Labor Day. Till next week, peace and love. Stay green. Love you guys.